Why did Nvidia stock flop? Why were expectations so high? What does this mean for the course of the stock market for the rest of 2023? All this and more, but first, hang on. Hey everyone, welcome to my channel. Why did Nvidia flop? I think it was priced to perfection. It not only was priced to perfection, it was priced beyond perfection. And the expectations were beyond perfection. So it beat the average estimates, but what people wanted, they wanted to beat the highest expectations, the highest estimates. And it didn't quite do that. It beat average estimates handily, but it didn't beat the very highest estimates, which is like unbelievable. Nvidia is a very profitable company. They have a 75% margin. They're selling some of their chips for $40,000. This is a company that's going to grow despite its huge size already, just because there's such a demand for semiconductors. Semiconductors are the new oil for the new world. To give you an example of what I'm talking about, it was thought that their revenue forecast, the average revenue forecast, thought that it would be like 18 or 19 billion. Nvidia came in with 20 billion revenue forecast. That wasn't good enough because the very highest estimates were 21 billion. So they didn't meet the highest expectations of the analysts. So Nvidia's numbers topped estimates, but it didn't meet the loftier expectations. It's like the artificial intelligence investors, the AI investors, wanted to see the boom continue, and they didn't want to see a mild uptick. They wanted to see an explosion upwards. Revenue was up 206% in its most recent quarter. It's like, what do they think NVIDIA is? Some kind of machine? Wait, I guess it is a machine. So it is puzzling that the stock is slipping when the demand for semiconductors is absolutely soaring. Its price was around $500 when it went to aftermarket, but in the aftermarket, as soon as the earnings came out, it dropped like 27 points. Okay, it eventually came back to like within 5 points of where it was, but then it settled sort of about a couple hours after earnings were announced. It kind of settled about 10 points down. So it went down about 3%, 2 or 3%. So NVIDIA reported record revenue overall that was up 206%, and its data center revenue was up 276%. So you think the stock market and the stock crowd of investors would have been a little more sympathetic to their cause. The major risk to NVIDIA's earnings in the future is its relationship to China, and that's dictated by the United States government. The United States government put strict limitations on how good the chips can be that they make for China. And they've made chips, especially for China, that just meet the restrictions imposed by the United States government. And I'm guessing that they're like 80% as good as the regular chips that you would use in the United States. So it's thought that these chips that aren't quite as good, that are 80% as good, that will make up for a lot of the lack of sales. But we don't know for sure. It would seem like that's going to happen because nobody can really compete with them except for AMD. And AMD is like 10% of the market, while NVIDIA is like 90% of the market. The rise of generative artificial intelligence will keep their graphics processing units, their GPUs, in high demand. I'm still bullish on NVIDIA because its prices come down, and with this standout earnings, although they don't recognize it as standout earnings for some reason, they got their expectations all out of line. But with these high earnings, That should bring down the price to earnings considerably and should make it more of a buy. So I'm still holding on to Nvidia, Super Microcomputer, SMCI, and Rolls-Royce, which is RYCEY, because they all have good statistics and I have a moderate amount of them. I'm not betting the farm on them. I'm just going to kind of long-term hold them. I think the environment has improved to the point where I feel like I can at least have a long-term swing trade, if not a long-term hold. We will see about the long-term hold. It's at least a long-term swing right now. We have to hope that the Santa Claus rally isn't over, that it hasn't come early and it's going to be petering out now. What's going to be so important is retail sales. We got to see how this holiday shopping season goes because that is going to prop up the economy considerably. And a lot of places like Nordstrom's are predicting that it's not going to be that great. So we have a reason to be cautious and to limit our bets. And I'm going to keep a good supply of interest-bearing instruments at hand while taking some minor risk. Interest rates have been staying down. The 10-year rate is less than 4.5%. So that this is very favorable. So I think we're going to have a decent end to this year, unless something very negative happens. But it could be a drag if that holiday shopping doesn't pick up more than what it is expected to do. But I will do day trading when it seems right. And I found a new triple leverage ETF that I think is just as good as TQQQ. And in some ways, it's better than the T triple Q. The other triple leverage bullish fund that I like is FNGU. I think of it as the Bank of Montreal Super Fang Club. And it consists of the Magnificent Seven, but it also includes Broadcom, Snowflake, and Netflix. Now, I'm familiar with all these companies, particularly Netflix and Broadcom are wonderful companies. But Snowflake, that one puzzles me a little bit. Snowflake is owned by Warren Buffett, and it mainly does data storage for businesses. And they're located in Bozeman, Montana. So I don't know that much about them. The statistics aren't that great. There's been concern about their revenue going down. So I'm a little puzzled at that one, but I think maybe Warren Buffett giving it the thumbs up or at least allowing it to be traded on his platform is maybe good enough for it to be included because he doesn't buy that much technology. 50% of the technology he owns is Apple. So you have to be fairly good to get in. So, but I like this because it's 10 technology stocks and about 10% of the fund is allocated to each of the 10 stocks. Now, it doesn't come out to exactly 10% because the prices fluctuate so much. But at any given time, usually one of these 10 stocks will take up anywhere from 8 to 12% of the fund. So they try to keep it as close to 10% as they can. As you look at this chart comparing FNGU to TQQQ, you can see why it's so alluring. Since the beginning of the year, it's made 371% about, and the triple Q has made over 150%. But geez, what a difference. So if you can stand the volatility, which is what you want when you're day trading, it can be very profitable, but it is risky. So for now, it's a short-term hold and maybe a longer-term hold if things turn out well on Nvidia, Super Microcomputer, and Rolls-Royce. while playing the market with triple leverage funds on a day trading basis. And there will be days where I don't trade. And if I don't trade, that means things are not looking good. I will not short the market unless the VIX goes over 20. So it's basically either day trade on a hot day or no trade, plus hold my 3 stocks. That's the way I roll. Thanks for listening and watching. Be sure to like and subscribe. I'm hoping that we have a Santa Claus rally that hasn't run out of gas yet, as it's just barely begun.